So yeah, Tracy, that was a good question on TNA. On sometimes that you just get that bad data that pops out like that, and oftentimes I'll go and since we didn't see it on the daily chart also, that's a good indication that a clue that, hey, this is a bad data on the intraday charts. So okay, Shakeout Plus. Let's talk about Shakeout Plus. Mike, researching this and working through it, I found it very, very, very interesting. Makes me want to get back out my Jesse Livermore autobiography and reread it. I know the first couple of times I read that, exceptionally interesting. So all materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. So there's the man. Very interesting guy. He started trading when he was about 14 years old in the old bucket shops. And basically his claim to fame, of course, is he was worth at one point in his life $3 million and $100 million after the 1907 and 1929 market crash, respectively. Adjusted for inflation, okay, the 100 million in 1929 would equal about 1.29 billion in 2016. He had houses all around the world. He had still-hold yachts that he would go down and spend time in the Caribbean on. He would receive his stock quotes via either teletype, and so they were sometimes days late, or he had his own ticker tape machine in his mini mansions that he had. And so the thing about Livermore, have you done much studying about Livermore, Mike?
I've done some, although not recently. I mean, it was a few years ago I was reading about him. And anybody who's really interested in trading, and the history of trading, the history of markets, should really read a little bit about Livermore.
Yeah.
Just as background information, and realize that a lot of the sayings and the cliches that are handed around in trading originate with him.
They do. And that's the second point here. Apart from his success as a security speculator, which is what they used to call traders, speculators, Livermore left traders a working philosophy for trading securities that emphasize increasing the size of one's position as it goes in the direction and cutting losses quickly, basically pyramiding into your full positions. And he would be many multiples of margin. And I was reading some of his stuff. He lost, basically both of these fortunes. And so here is something that from the book that he wrote, okay, How to Trade Stocks by Jesse Livermore. And it has a lot of his quotes, and this one I really particularly like. The game of speculation is the most uniformly fascinating game in the world, but it is not a game for the stupid. He didn't mix words either. And mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer, they will die poor. And so that was one of his quotes. So his nicknames was either the Boy Plunger and the Great Bear of Wall Street, because he basically predicted both the crash of 1907 and the crash of 1929 and capitalized on them greatly. Yes, Joe, you're absolutely correct. He did commit suicide back in 1940. He was a very detailed guy. He left his third wife, who he was married to at that time, an 8-page suicide note. Well, I mean, that's, for me, that would be a novelette. But he basically took his own life. He shot himself, and claimed, telling her about what a failure he had been and how he failed her. However, at the time of his death, his net worth was still $5 million. Now, back in 1940, $5 million was worth a lot more than it is now. And so, but there's the guy. And here is the autobiography by Edwin Lefevre, who basically, bases this novel on Jesse Livermore. Really extremely interesting reading. Really extremely interesting reading. So I basically, recommend that to everybody. It gives you a flavor also. He wrote that in 1924, and there's something very rich about the writers of that era in the way they described and colorfully described things. So a good read for everybody. So let's get on to his favorite, one of his favorite setups was the Shakeout Plus. Yeah.
Before you get going here, and I really want to see this because I haven't reviewed it myself for a while. But just a note of caution to everybody. You're always told when you start getting educated in trading and investing that you need to have rules and you need to follow your rules. Livermore is the best example I know of somebody who had rules and could not himself follow them.
Without a doubt.
He lost his account during his trading and investing career 3 times, and he could not recover after the third one. He declared personal bankruptcy. Everything you mentioned, the houses, the yacht, all that had to be sold because of the bankruptcy, and then he ultimately committed suicide. So keep that in mind, when you hear about making rules and keeping rules and adhering to rules. This guy himself espoused the same ideas and ultimately, couldn't do it.
Yes, but when he kept his rules, he did exceptionally well. But again, it was those times when that little demon on your shoulder that comes and whispers in our ear, "Oh, you don't need to keep your rules this time," and whack. So the Shakeout Plus, used by Livermore and Bill O'Neill on bottoming stocks for an early entry point. So it's basically based on a sell-off or shakeout of weak holders. Basically, when we look at a chart and you see those large sell-offs, Mike talked about this a couple of weeks ago, where you're seeing those large sell-offs, and oftentimes that last sell-off was the one that would lead to the reversal that would go on back into an excellent trend trade. But the sell-offs of weak holders, and then a rebound of 10% above the most recent swing low. We'll show an example of that. It's kind of a rare pattern that does consist of two sharp sell-offs with a second slump undercutting the first. It's a bit like a double bottom if you're familiar with the IBD double bottoms, but it generally unfolds more quickly within a few weeks versus double bottoms that last 7 weeks or more. So where does a +3 come from? And this is something to just remember. The +3 comes from basically is that it refers to he was trading a lot of $30 stocks back in the day, which was an expensive stock at that time, and so it was a 10% rule. You'll see it bounce back and soon jump to new high ground, and so the $30 was basically represents a 10% rally above above the low point, the previous swing low, and so the which was a signal of momentum changing and real strong demand. For higher priced, of course, this is just basically somebody taking his rule and adjusting it. You could look at for bigger gains. If it trades $50 to $60, it'll be a shakeout +6 if you want it. The point, it must be an unusually strong move higher, i.e. a shift in momentum. One thing that's very interesting as I was going through and just taking a look at this, Livermore's rule can be applied, I believe, in a little bit of in an earlier perspective because of the modern tools that we have. Remember, Livermore was operating oftentimes on stock news that was up to 2 weeks or more, 2 weeks old, working off hand-drawn charts to show the swing lows and all that kind of stuff, whereas we don't have that. So let's take an example. Here's a recent example, Momo, daily chart, on a daily chart. And so what are we looking for? 2 strong sell-offs. And so we get a sell-off, very clearly, these big red candles. We get a sell-off all the way down to this swing low here. Does a little bit of a rebound, trying to regain to see if it's going to go back, continue on to its rally stage. Well, it fails. It pulls. So our first swing low, 36.49. Second sell-off, undercutting the first. New swing low, 35.02. Then basically we just work the price indication, 36.49, which is this swing low here. And if we multiply that times 10%, that gives us 3.65 to add to this, which gives us a trigger entry of $40.14. Now, this is the way, of course, that Livermore applied it. When did it hit that amount? Well, it hits that amount here on this day. And so one would just basically have a conditional order in place, waiting for that 40.14 to be hit. When did that happen? 7:10. As you can see, this pattern took from just about a month and a half, about 6 weeks to work out from when it hit the first low, hit the second low, and then reverse. So about a month and a half before it hit this trigger. And at that point, you can establish your stop losses, which a 5% stop loss is down about 38.13, which would basically have been in this area here. So if it would be failing and falling down, back into the below the 8-day moving average, and you'll see there's a correspondence there between the active trend trading's 8-day rule for selling the 8-day moving average rule. So it gives you can do yourself a profit, 5% or more. Or just trail this. A lot of times Livermore would actually just trail this when it would pull back, because he had in his mind, he was really a statistician that was really amazing. He had in mind how many shares he wanted to buy. If he thought this was going to be a strong player, he would move in and pyramid into a full position and then add to it as it goes further. That's one of the areas where I want to continue to strengthen my game and that ability to add to a position rather than just taking the 5 or 10 or 15% profits. So that's basically how he basically would enter his position and then just hold it. And then, Mike, do you know what his stop losses were? Is Mike still?
No, not exactly. No, I don't, off the top of my head.
Okay. And but I know that he would do a trailing stop sometimes, and you'll need to read part of his book to find out what the rest of his rules are on that. Bill O'Neill, of course, took his rules and said, okay, it's 7 to 8% from entry point. And Bill O'Neill's done very well with that. But then Bill O'Neill kept his rule, follows his rule, while Jesse Livermore did not. So this is one area. So any questions? And here's the thing where I started taking a look at this. What are the other, what are the tools we have with us today that where we can take a look at something and go, and because waiting for it to move all the way up here, this 10% rule, who's got the patience for that? One thing you can do though is if you're looking at this chart, and let's say you're in it over here, you can say, oh, I just had a shakeout plus type of move got filled. Okay, this is probably going to continue strongly to the upside, and that's the way we can use that information to say, okay, now I can start building my position based on the pullbacks either to the 8 and or the 20-day moving average. Good? So are there characteristics of the shakeout plus that can apply to other trading opportunities? What about a shift in momentum on the basis of price action, that's what we measure with the active trend trading. We have intraday examples, we have daily examples, we have weekly examples. So let's go back to Jesse Livermore's setup for Momo. But instead of using a 10% shakeout, let's look at using a 1 to 2% shakeout, and we'll just round it out to 1.5. So we get our basically lows, and then we can sit there and go, okay, 36.49, that remains the same. But now I take this 36.49 and I add a simple 1.5%, which is 36.49 plus 55 cents, which gives me a potential entry at 37.04. What does this do for me? It does a couple of things. One, it gets me in early, and my stop loss would be a move back down here below the low of this swing low. That gets me in, and as you can see, it's very similar to, yeah, Mark, that's what I thought that Livermore used. Well, when he used stops, he used 10%. So, stop down at that area. So on 6/17, we entered, basically 6/15, we get our initial, we make our new low. Now, we don't actually know that this is a new swing low until we actually get this day here, but we still get the trigger to move in. And once this downside and this, this downside here had taken us to a new low, that's when we can at least start planning for a potential trade to the upside. Now, what was giving us a clue on that? Well, that's where our other momentum indicators that we are utilizing, that's where they come into play. And this is one of the beautiful things about this is we're getting these, look at this, positive divergence on the market forecast, or on the momentum, a crossover on the 8, on the TSI, telling us that momentum is coming in back to the upside. That it moves back above this swing low is just another clue to say, aha, this could turn into a good trade, or give us the viability to jump into the trade. So as we see that, so stop loss, we set the stop loss, and again we can, but wait, there's more. There's more, and I wanted to show you this. So this is another way of approaching this. We're paying attention to the same kind of move that Jesse Livermore was, but then because Jesse Livermore, he didn't have TSI, they didn't have momentum back in the 1920s. They hand drew their charts. I think that that was about the time they started looking at doing moving averages. If you want a really good history on history of technical analysis, get the McGee-Edwards book, the latest edition, and that's just the textbook Bible of technical analysis, and I very much recommend it. And then Joe mentions here that this is showing an inverse head and shoulders here on the TSI. All good points. And so that's what I'm saying is, while knowing about the Jesse Livermore's shakeout +3, knowing about that setup, add to that add the information you have on that to the other information that we can now pick up off our chart on a spontaneous, instantaneous procedure, we can sit there and go, oh, okay, this is what I'm looking for. That's that momentum shift. That's what he was trading off of. So what about alternative two? What about alternative two? So I've highlighted this area of Momo. And again, those areas stay the same. Swing low, swing on the daily chart. But what happens if we, is there a potential even better entry? Or one could say a more aggressive entry, or one could say, another type of entry. Well, the answer to that is go to the 1 hour chart. And what do we have on the 1 hour chart? Well, on the 1 hour chart, we have a couple of things. One, we have these pullbacks, pullback, pullback, pullback. Now, as you can see, all of these intraday charts is within that big rectangle that I showed on the daily chart. So there's our pullbacks. There's our third pullback. And as you can see, swing low 1, 38.08. Swing low 2, 36.02. Swing low 3, 35.02. Again, shakeout plus 1%. Let's say, and let's say I'm watching this on an intraday basis, or I'm comparing my intraday and my daily charts. I know I'm getting close to a reversal. Well, since we get an intraday push down to this 36 level, I can take that as as a potential to jump onto a quick swing trade or trend trade back to the upside. There's my 36.02. That's a new level that's lower than what we had seen with the other method. So my entry in this case would be 36.56, which is 36.02 plus 1.5, or that should be 5%. Oh, 1.5%. There we go. 36.56. That's my entry. So my entry hit during utilizing my technical analysis on an intraday 1 hour chart is about 50 cents less than my daily entry. And again, I can also then set my 5% stop loss, which would be 44.73, which is just below this swing low. In my other entry, it was just above the swing low, so there was a bigger chance of getting taken out on that. So that we can take the same example, take it to a weekly chart, and see it work out there also. It's just a matter of taking your time, looking for the pattern, and then it's that reversal and taking out that past swing low, and how much of that, we can go all the way to 10%, or does it make sense maybe to go to a lesser amount because we've got the momentum indicators showing us, the momentum is reversing. It may be time to take action early. So, okay, so summary. My beautiful, those are really nice arrows. Let's get rid of that. Summary real quick is basically, when Jesse Livermore used this technique, he was often reacting to price action depicted on hand-drawn charts, delayed days and weeks on getting his price action data. For us, we have to be aware of the mechanics that can add additional surety to decisions made with more data. Also, more data can also be distracting, so be aware of that also. With the right tools, momentum shifts can be identified earlier. And so I'll come back to that shortly. So Mike, you have any comments? Any comments or questions, guys?
I I really have no comments. I think it's good to review this technique from time to time, whether or not you want to utilize it or whether you favor other types of entry methods is, up to the individual. Dennis, between you and I, maybe we should chat the next day or two. I've done a little bit. I've gone back and reread some stuff I haven't looked at for years. And it's completely off topic for tonight, but some really interesting ideas about alternative entries.
Okay, cool. We can do that. So I've got a presentation that I've got some presentation I'm doing on Saturday downtown Honolulu, and so we'll do it sometime between now and then. Okay. So.
Okay. Yeah, that sounds good.
So, hey, just real quick, if you are not a premium member, I do want to invite you to, come and join us at Active Trend Traders. One thing that we do, the regular monthly membership is $74.99. For anybody who's joined us on this webinar, $44.99. And if you become a member, that is your frozen in time membership amount. And or we also can have the early warning alerts for index ETFs. Also a 40% savings there off its yearly amount. And so you can find that at activetrendtrading.com/combo membership intro. And then that's what we're about. Clarify, simplify, and multiply. Now we had a couple of questions on. So any, let's see how much time we have left. Okay, I've got a couple of minutes to cover a couple of stocks, and so I sure will, Eric. And so, and the answer to Eric, your question, Eric, is just sometimes I miss them. And I try to get the information out to everybody so that they can take action when appropriate. And it just did not trigger in. Yeah, we all do. Okay, real quick. Yeah, EGRX, which is Eagle Pharmaceutical. Okay, and not quite 500,000 shares per day, but it does look like, it has come down. This was a huge sell-off. Let's take a look at this on a bigger perspective time frame. Let me roll over here. Okay, this makes it look not, a little less bad. That's not really good English, but we get a push up. This is the monthly chart, and we are down into a support level at the $45 level. We're getting a push up. Goodbye. I would want to see EGRX do something on a weekly or a daily chart to put it back into an uptrend. Until it does that, we close so hard below the 50, all the moving averages. Any push back up into the 8 to 20 right now has to be looked at potential, or even the 50 has to be looked at as a potential of a shorting opportunity. That's one. NCR. Again, similar type situation. NCR. We have a crossover on. Let's go back to we have a weekly crossover on the 820. That's the weekly, which is a very, and also 820 and then 840. And so basically we are way below even the 200-day moving average and falling. Any type of pushback now, push back up into the 8-day, the 20-day should be looked at as an opportunity to potentially short this entity. Last time it bounced up this high was back here in 717 the week of, and that reversed down after earnings and fell even further down. Now we are at a support level, so we'll have to see. If it bases here at the 35 level, it may give us an opportunity to jump into that long. Let's see, SWKS, Skyworks. Is it Skyworks? It is Skyworks. I think it is. Okay. Yeah. Hey, Eric, I like Skyworks. I mean, it is on the proper side of its moving averages. I would like to see it maybe pull. It is at a resistance level, at the 105 level. Any kind of pullback into the 820, move back above the 50. So it looks like it's all in gear to start moving higher. Volume, okay, not great, but we can apply that to what time of year it is also. Draw in a line across here. And so if it takes out that line, that would be one item. But again, I like it if we get a bounce off of this area. Recognize that is a hanging man after a really short little uptrend. But you've got a level of support down here at 101, and the moving averages 103, 104 to move higher. We've already passed earnings, and so this is kind of like just a nice little move up. And then a move back down to support off of the off the 100-day moving average. So looks good. So yep, made the double bounce here. And so when you get a double bounce like this with increasing, I'm waiting. I'd like to see that pull back into the moving average. Let that be my line of demarcation. Again, so. Hey guys, thank you very much for joining us tonight. I've got to get out and get my fitness, my long walk in for today. And I just hope you really enjoyed this session. And if you're interested in becoming an active trend trading member, please take advantage of this of the discount amount. So God bless everybody. The recording will be up probably first thing tomorrow morning. See ya.